name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Data out of China on Thursday showed that exports had performed far better than many had expected. Beijing reported that exports rose by 3.5% in April, flying totally against the expectations of a 15.1% fall. We also saw a 14.2% drop in imports. The surprise reading gave stocks in Asia a boost as it showed that the recovery in China may be further along than many had expected. The news helped to outweigh initial losses that had crept in from the session on Wall Street as US-China relations remained high. Donald Trump has stated that he would look to report on whether China had been meeting its obligations under the new trade deal in the next couple of weeks, further increasing those tensions between the two superpowers. Yesterday's private payrolls in the US will lead into today's data as the unemployment picture is set to be the driving force for the next couple of sessions. The ADP payroll came in and showed that 22 million had been laid off in private companies in the US in April. The initial jobless claims due for release this afternoon are expected to show that another 3 million Americans claimed unemployment benefits in the last week, while Friday's jobs report is expected to show a further 22 million lost their jobs in the non-farm payroll reading, while the unemployment rate jumped to a devastating 14%. China saw the start to an incredibly busy week on the economic calendar for Thursday. Early morning saw the Bank of England meeting minutes that pointed to the fact that despite government and central bank efforts, the UK economy could shrink by 14%, with the unemployment rate topping 9%. Predictions showed that the economy would slump by 25% in Q2 before slightly recovering before the end of the year. However, this draws into question the behaviour of stock markets over the last few weeks. Stocks in Europe and on Wall Street have been relentlessly rallying on hopes of easing lockdown, better COVID-19 contraction numbers, and the trillions of dollars worth of economic stimulus pumped into the economy. However, with such dire economic readings, stock markets, even at recent lows, look overpriced, and market bulls must be wary that sooner or later the focus will shift to the overall global economic nightmare. Warren Buffett himself warned that US indices had yet to see their lows, and with current economic predictions, it's hard to disagree with him.